So the general rule is we need to divide the accounts into two sections. The one section, we'll call it the balance sheet section, and these are all accounts that refer to owner's equity, liabilities and assets. And we'll have what they call the nominal accounts sheet section. In the nominal accounts sheet section, we basically have all the expenses and we have all the income. So all of these balance sheet section accounts will get B numbers, and the nominal account section will. When drawing up the general ledger, we should still remember the acronym we used before, that all accounts that are expenses, assets and drawings increase on the debit side, all accounts that are liabilities, income and capital increase on the credit side, and this is what we'll take into account when we draw up these ledger accounts. So we'll notice bank in the cash receipts journal, obviously because we're receiving money, this total goes to the debit side of the bank because the bank increases on the debit side. So that 363. So eventually you will have to draw up a trial balance, and there you can see these are all the balance sheet account section, there's all the nominal account sheet sections, and here's all the folios or the references for those various accounts. This is where we're going to get to eventually. That's why these numbers are important. Good afternoon, class. When we've done with the journals, this is what they should look like. We'll have the cash receipts journals, we'll have entries everywhere. The solutions have already been posted to you. What we need to do now next is take these accounts and post it to the general ledger. So in order for us to do it, we need to start giving reference numbers to different parts of these journals. So you'll notice that each of them will have totals for the columns, and there'll be accounts that are listed on the side here by the sundry accounts. A general rule we need to mention: after we've drawn up the general ledger accounts, if there's only one entry on either the debit or the credit side, we'll simply draw a line, and that is the amount we take to the trial balance. If there are more than one entry on the same side, then we'll have to draw a line and add up those numbers, and we'll take the total to the trial balance. When there are debits and credits, as entry on the debit side and the credit side, we should see which one is the bigger. Whichever one is the bigger, we will use as a total for both sides. So where there's columns, we can just simply write the references here at the bottom. In the sundry, we can use the folio where we can put the reference numbers there. Right, to make things easy for you, I've given you the solution with the general ledger, and you'll notice every account would have a reference number. It is appropriate to it. So in the exam, this will not be given to you. You need to be able to give the reference numbers on your own. Just note, balance sheet section is kept separate, the nominal account sheet section is kept separate, and the accounts in chronological order. When we're using accounts in sundry, then we would use the date this transaction happened. So when you put the entry for capital, we're going to put it for the first. When you put the entry for the loan, we're going to put it for the second. And all of these, the capital, loan, etc., the sales, services, all of these accounts, the contra account is going to be bank. So when we put here, we've got bank. For bank, when we put totals from the columns, we write total receipts. Total from the payments, we write total. So the 363, 658 and 37 will go to the debit side. On the cash payments journal, because the bank we are making payments, the bank is decreasing, and bank decreases on the credit side, this total of 193, we will put it on the credit side. 193,665.33. And we do this for all the accounts. When we are putting the accounts, the amounts from the columns, we will use the last day of the month. In this case, this is the 31st of March. When we are using accounts, for every other account, for example, the capital account, we'll see the payment was done on the first, capital increases on the credit side. We'll put the 1st of March 2007. This contra account will always be bank. And this will be true for all cash receipts, cash payments, for petty cash journal, because the main account we are using is the petty cash account. All these contra entries will be petty cash, and that's what we record when we put it either on the debit side or on the credit side. What we should bear in mind is, if we see bank, for example, in a cash receipts journal, and it has the reference B1, When we go to the cash payments journal, we use exactly the same reference number. It means all of our accounts in the cash receipts and cash payments journal, if the names are the same, we'll put all the entries in the same general ledger. And we'll do the same for the petty cash journal. So we will give all the columns reference numbers and all the sundry accounts also reference numbers. So if you look at the cash receipts journal, we'll see that bank is the first column that we have, and bank is obviously a balance sheet account section item. So therefore we have to give it a reference. It shows B1. Output VAT is exactly the same because it's a balance sheet section. We'll give it another reference, for example B2. But we'll see services rendered and sales are both nominal account sheet sections because the income, they will get N numbers. And we do the same with the sundry accounts. So let's say we get to a situation where the debit side is 100 Rand, the credit side is 300 Rand. Because this is bigger, we'll take it down as a total of both. The difference would be the 200 Rand. This difference is called balance. This is balance that we take down from this side to that side. If the balance is on this side of the account, we will take it down to that side. So here we'll call it balance carried down. Here we'll call it balance brought down. This is the balancing amount between the debit and the credit side, and this is the entry we put into the trial balance.